business funding. Look, I have helped tens of thousands of business owners get money, even when they thought there was like no way they could get approved. And I can tell you that along the way, I've seen a lot of mistakes that entrepreneurs make when they're trying to get out there and get capital. But if I look at all of the mistakes that business owners make that have prevented them from getting the money that they want and need, there are 5 overwhelming standout mistakes that I see business owners make that are preventing them from getting funding. And if they just fix these easy things, then their chances of getting the money they need would exponentially increase. So look, if you're looking to get money to launch a brand new business, if you're looking to get money to expand and grow a business, if you've struggled to get the money that you need, if you think you're going to get denied and don't even want to apply, or if you've gotten approved but haven't gotten the amount of money that you want or the terms that you want, it's probably due to one of these 5 mistakes that I'm about to decode right now. So let's decode the 5 biggest mistakes that you could make that help you get approved if you avoid them, and if you don't avoid them, are what are getting you denied. So the first one is one of the things that I talk about quite a bit because it accounts for nearly 60% of all funding denials. So think about that. 6 out of 10 people that are getting denied for loans, credit lines, or credit cards, it's all due to this one factor. And this one factor is what lenders are calling fundability. It's basically just the credibility of your business. How credible are you? Do you look legitimate from a lender's perspective? Now, I oftentimes show quotes from Forbes and Inc. and all these financial authorities that have different words for this exact same thing. But fundamentally, it's all the same. Do you look legit or credible to lenders? Now, they're not looking and denying people because of income, because of credit score, because of time in business. Don't get me wrong. Those things are all factors for denials. But 6 out of 10 denials are not happening because you don't qualify. They're happening because you just don't look credible. Now, here's the fantastic news about this. This is super simple to fix. Like legitimately within a couple hours max, you can fix these issues and permanently be good in this area. But the problem is, if you don't fix this, this will get you denied and plague you for the lifetime of your business. So what lenders are looking at is basically, are you separate from the business? I think it's the first thing they want to see. Like everything about your business should be separate from you. So every single aspect, right? Your business should have its own entity. That way it sets it up as something completely separate from you. It has its EIN versus your social security number. It has its own bank account separate from your personal bank account, right? It has its own address separate from your home address. It has its own phone number separate from a mobile phone or a home phone that you're using. It has its own license. Everything about your business should be different from you personally. It's one of the first things that lenders are really looking for. And like, does your business look professional, right? So we want corporation or an LLC versus a sole prop or a partnership. For example, we want an address that's not like an iPostal or a PO box address. We want like something that tracks back to a real location. We want a business phone number, not a mobile phone or not a home phone number, for example. We want to make sure we're managing the bank account responsibly. We want to make sure we have a professional website and a professional email address. Man, that's a big one. In the last 6 months, if I've seen lenders go all in on one thing above all else, it's now website. Like that's their thing. Meaning that we see more denials and more lenders coming to us and saying, we will not approve someone unless they have a website established and it looks professional. So that's the newest trend I've seen over the last 6 months, is this increase in denials just because the business owner doesn't have a professional website set up. So not only are these things need to be separate from you and the business, but you need to make sure that each one is set up where it looks credible, especially your website. If you want help with that, there's a great company that we're partnered with, Profit Lifter. You can go to profitlifter.com. It's 100% free for 7 days to work with them. And then it's like $97 a month. And they give you like a CRM, your website, like they build funnels for you and schedulers and like $2,000 worth of software they compact into that $97. So check them out at profitlifter.com. Denise, hello. Thanks for coming in. Anybody else coming in? Tell me hello and tell me where you're coming in from. Give me your business name and I'll give you a shout out right here on the live stream. So we've got to make sure that we look fundable, that we look credible, that we look legitimate. doing all those things where we separate ourselves from the business and make sure that every single thing we're putting on an application makes us look fun, makes us look credible to lenders and credit issuers. The next problem and the mistake that I see business owners make is that they are just not exploring all of the funding options available to them. Most business owners don't know where to go to get money. So they talk to somebody they know, they get a referral there, they might go into their own bank, which is a common mistake. Then they may look online for business loan. So the problem with that is that there are hundreds of thousands of different online lenders and lenders out there. Now, it's good for us because more funding is available now than ever before. And Denise is the only person telling where she's coming in from. So she's from Cincinnati, Ohio, Pure Sip Cinch. I think that's Pure Sip Cincy. So Pure Sip Cincy. Congratulations on your business, Denise, and your success. Thanks for coming in. So not knowing or exploring the right funding options is one of the biggest mistakes I see business owners make. First of all, don't go into your bank. Okay, look, I'm not against banks. But banks aren't going to work for you unless you're really well established. Good personal credit, established business credit, collateral, tax returns that show profits. If you don't have that stuff, they're not going to help you. So we don't want to go to our bank. We also don't want to just go type in business loan online and go with the first lender. The first part of fixing this mistake is we need to identify the kind of funding we can actually get right now. We don't want to be applying for funding we can't get. So we got to figure out what we can't get. And what we can get really comes down to 3 C's. Cash flow is the first. Does your business have consistent cash flow of $5,000 a month or more for 6 months or longer? If the answer is yes, I make $4 or $5 grand a month and I've had it for 6 months or longer, then that opens up cash flow financing, revenue lending, merchant cash advances, credit lines at places like Fundbox or a Bluevine, for example. If you process payments through PayPal, Square, or Stripe, it opens up funding options with them as well. It unlocks an entire category of funding known as revenue funding. So we can open up and unlock this category if we just have that consistent revenue. Now, maybe you're a startup. Then we look at the second C, which is credit. So the second thing lenders look at is credit quality. And if you have good personal credit quality, that unlocks an entire other category of funding. That opens up credit line hybrid, where you could get $150,000 in credit lines for your business just because you have good credit. Or a guarantor, like a family member, a friend, an investor, somebody else's good credit you can use to be able to get approved as well. And the third category is collateral-based funding. Now, collateral-based funding is like the biggest category of business funding that exists. It has more types of funding products in it than every other type of funding combined. And that's because there's a lot of stuff out there you could use as collateral. Stocks, bonds, 401ks, IRAs, cryptocurrency, for example. You could use residential properties, commercial property. You could use vehicles. You could use equipment, inventory. Again, what asset do you have? What thing do you have that's worth money? If you have something in the personal side or business thing that's really worth money, then that could be used as leverage to be able to get you financing through one of these collateral-based or asset-based lending products. Hey, Bertha's in the house. Thanks for coming in. I love all of your emojis too. I'm an emoji fan, so thanks for coming in. Again, if you're just coming in, tell me your company name and I'm going to give you a shout out on the live stream. Typically, these things are seen by thousands, sometimes tens or hundreds of thousands of people. So I don't know, free publicity for your company. That's not a bad thing. Type in your company name and I'll give you a shout out here. So exploring your right funding options. What is your strength? Do you have good personal credit or somebody that will sign for you as a signer that does? Do you have some kind of asset that can be served up as collateral? Do you have consistent cash flow? If you have one of those 3 things, then that's the kind of funding you want to pursue. And it's going to narrow the search of funding programs you're going to look for. Now, you might have more than one of those things. So maybe you have good credit and cash flow. Well, then that would open up term loans for you, longer term loans, maybe even SBA loans. SBA loans are definitely unlocked if you're coming in and if you are actually using, or if you have good cash flow, credit, and collateral. That's when you go to your bank, when you have all 3 of the C's. But if you only have one of the C's, you want to look at an online fintech lender that just specializes in cash flow financing, credit-based financing, or collateral-based financing. It's going to save you a ton of time and fix this mistake of you not finding the right funding option, because we're going to actually be exploring the best funding options that are out there. Martin Nolan is in the house, and Hero Lee says, Bitcoin, yeah. There is actual loans that you could use where you're borrowing against the value of cryptocurrency. And there's actually two of those types of financing available. And one of those type of financing, you still control the cryptocurrency. The other one, the lender is in control of the cryptocurrency while the loan is outstanding. But you absolutely can use cryptocurrency and Bitcoin as a collateral for collateral-based financing and get a cryptocurrency loan for your business, which is pretty cool. And Martin says, hey, Nolan Logistics Group in Memphis, Tennessee. I love that. So congratulations on your business, Martin. Nolan Logistics Group in Memphis, Tennessee. Hello to everybody on your team. So that is mistake number 2, right? Mistake number 1, not making sure your business is set up credible, not separating yourself from the business and having a different address, phone number, bank account, all that. Mistake number 2 that will get you denied, just trying to randomly choose the kind of funding you can get. Now you have a formula to figure it out. Cash flow, credit, or collateral. What is your strength? If you say, Ty, I don't have any of those things, it's okay. Then we look at alternative kind of funding. Alternative kind of funding is crowdfunding. It's getting money from private investors. It's getting money from grants. It also comes from building business credit. If you don't have cash flow, credit, or collateral, the easiest way to fund your business is through business credit. And if you want to do that, well, then I'll probably throw this on the screen. There's a great guide we have where you can actually get the step-by-step process to build your business credit. So I'll throw it up on the screen. It's also at creditsuite.com/EIN. Scan this QR code, go to creditsuite.com/EIN, and that'll get you business credit. And that business credit will help you fund your business even if you don't have one of those strengths, cash flow, credit, or collateral. So that brings me to mistake number 3 to avoid to be able to get the funding to grow your business. And that is just basically ignoring the financial history. Look, lenders often use business credit scores and or general financial history as a factor in decision making, right? This isn't surprising to us. We know this. Like if you are going to go in and get a personal loan for a car, like you need to have credit established. If you're going to go get a mortgage, a personal mortgage, you've got to have credit established. If you're going to go get a personal credit card, you have to have credit established. It's no different for you. You need to establish business credit because business credit is what actually will give you the ability for your business to fund itself. Business credit is what will actually help you qualify for lending. It's what gives the lenders a history of how you pay your bills. So if you're trying to go get a credit card or a credit line or a loan for your business and not succeeding, well, then have you checked your business credit reports? What's on your business credit reports? If you haven't done anything to build your business credit, you probably don't have established business credit. Now think about that for a second. Why would a lender give you a loan, give you a credit line, give you a credit card if you have no credit history whatsoever? It's as impossible as a consumer as it is for a business. So you've got to make sure that you're showing a history of financial history of paying your bills. And the easiest way to do it is make sure you build your business credit. To go to lenders when you apply for a loan and say, do you report to a business credit reporting agency? Let's ask the lenders if they actually report and try to move forward with lenders that report to the business credit reporting agencies. Let's get business credit cards, Visa, MasterCard, American Express, auto financing, and credit to credits at every kind of retailer you could think about. Amazon, Best Buy, Home Depot, Lowe's, Staples, all of them can issue us business credit cards in our business name. And when we pay these bills, they show on our business credit reports. Now we have a financial history to show lenders. The bureaus, the business bureaus give us credit scores. We have accounts on those credit reports. Now lenders have a history, a track history to look at, see that we're paying our bills on time and approve us. Here's the crazy thing is that the more we do this, the more we don't need our personal credit reports anymore. The more our business establishes its own credit. And then we can start getting away from personal credit because the business has its own history of paying its bills on time. So this is a huge mistake that business owners make. They're trying to get lending, but yet they don't even have a history, a financial history for their business because they haven't done anything to build your business credit. Hero Lee, thank you for coming in. I appreciate you coming in and saying hi. And again, if you're just coming in, tell me your company name. I'm going to give you a shout out and tons of free exposure, which is kind of pretty cool right here on the live stream. So that brings me to number four. The fourth biggest mistake I see business owners make that prevent them from getting money is poor financial management. Let me explain what I mean. Look, lenders love your bank statements. They feel like your bank statements tell them all kinds of insider juicy gossip about you that you probably don't want them to know. It's why so many different types of loans you go to get, they're asking for financial documents, profit and loss statements, balance sheets, tax returns, personal and business, and most importantly, bank statements. Bank statements show them how you manage your life and how you manage your business. So you want to make sure that your bank statements are solid. You want to make sure you have a lot of deposits, not just a few. You want to have more money going in than going out. You account and have non-sufficient funds on there. You want to show responsible bank account management. A lender wants to look at these statements and see a lot of deposits, more money going in than coming out, a positive ending bank balance. That shows you that you are financially responsible, and that's what gets them to want to lend you money. So you should have a profit and loss statement and a balance sheet readily available. Some lenders may want them, but most lenders will at least want those bank accounts. And right now is the time to know this. When you file taxes, make sure you show a profit. The IRS any more than we actually have to, right? But the reality is, in my world where my job is dedicated to helping business owners like you get money, I can tell you there's a big difference between somebody that shows $1,000 loss and $1,000 profit. The person with $1,000 profit gets SBA loans and term loans. The person with $1,000 loss gets high risk, high interest loans. So you want to show some kind of profit. This tells lenders, hey, I run a successful, profitable business. Even if it's only $1,000 in profit, it makes a big difference. So by having tax returns that show a profit, by having bank account statements that show you responsibly manage your finances, by having other things like P&L and balance sheets ready when they're asking for it, this shows responsible financial management, and that's what lenders want to see. On the opposite, if you don't have P&Ls, if you don't have balance sheets, if you do the things that I said not to do on the bank statements, if you show losses on your tax returns, you become the type of business a business lender does not want to lend to. Now, I don't know if you're paying attention, but here's the good news. 4 of the 5 we've covered so far, and 4 are 100% directly in your control. There's all things you can control. You literally hold your own fate in your own hands with your ability to get money, because all of these you can make tweaks, make adjustments, and set yourself up perfectly to qualify for business funding. Now, customer savvy says, hey, I can't get any funding and it's becoming exhausting. Well, hopefully the tips here will help you figure out exactly what to do. This is what I've dedicated my life to. If you know what a lender wants and what a lender is looking for, it's very easy to follow these steps and set your business up the right way to meet their requirements. Then with this 3 C's formula we talked about, identify the type of funding it was completely frozen there for a minute, but we are back. So hopefully you're still with us. I know it just for some reason completely disconnected there. And as a result of that, I lost you. But we are back. You're going to have your share of technical difficulties. So let's get back to where we were. And Hero Lee says, is it possible to start business credit without using my social security number? If I were to start a new business, can I hire you to be my coach? Yes, you absolutely can hire our team to help you. The answer to that, Hero Lee, is info@creditsuite.com. Or if you just go to creditsuite.com, there's plenty of ways on our website to get in contact with us. As of your first question, yes, you absolutely can build business credit without using any personal credit checks to qualify. They may need your social security number to verify your identity. And Hero Lee, thank you. They may need your personal credit social to verify your identity, but they don't need to attach a personal guarantee or personal credit check for you to get business credit. So Hero, yeah, you can successfully start a business, build business credit without using personal credit in order to get approved. Now that brings me to the fifth mistake that I see business owners make when it comes to getting funding, and that is not having a solid business plan. Look, here's the reality. The reality is lenders are rarely ever going to ask you for a business plan. Maybe an SBA lender, but the others probably aren't. But a lot of them are going to ask you questions and make the determination on whether they want to approve you or not based on the knowledge you should have and would only have if you did a business plan. So if we look at things that are on a business plan is projections of what you're going to make financially. It's your marketing strategy of how you're going to get customers. It's a competitive analysis to know who your actual competitors are, right? It's what the products you're going to sell and the services that you're going to sell, how much you're going to sell them for. What does your product mix look like? How are you going to become profitable? All of these things are what are on a business plan. Now, there's a great software out there called Live Plan. I think this guy was on my podcast, Live Plan, and it's where you can easily and cheaply set up a business plan for your business. But have a business plan set up, it's like your guiding light of how to run and grow your business. And even though a lot of lenders won't ask for the business plan is easy to supply to lenders that actually give you an unfair advantage when it comes to getting money, but they're going to ask you a lot of questions that you would have the answers to if you had that business plan. So make sure you get that business plan. It's the fifth mistake to avoid with not getting and being able to get the funding you want because of not having it. So let's review these five. Number one, you got to set your business up where it's credible. You have to separate yourself from your business, separate address, separate phone number, professional website, separate email address. All those things need to be separate so your business can stand on its own. Number two, stop just randomly applying for funding. You should know you have a good chance of getting approved before you apply. The way to do this is know which type of funding you can get based on your strengths. Cash flow, credit, or collateral. Which is your strength? That'll determine the type of funding you can get. If you have none of the three strengths, then you want to build business credit. It's the best answer for you. Mistake three, ignoring your financial history, not having any financial history to show lenders. The best way to fix that, build business credit. When you're talking to credit issuers, when you're talking to lenders, make sure they're reporting the money they give you on your business credit reports. Now we show a financial history for our business, and we can start using that for our business to fund itself without needing personal guarantees, without needing personal credit checks. Mistake number four, poor financial management. Basically, you're not managing your bank account responsibly. You're showing a loss on your tax returns. You don't have profit and loss and balance sheets available upon request. Fix that by having those documents ready. Have a P&L, have a balance sheet. It gives you a good exercise to learn how to do these things, or your accountant or bookkeeper can give them to you. Make sure you show some kind of profit, not a loss on your taxes, and manage that bank account. Money. If you want to know a lot of different ways to get money for your business, then go to creditsuite.com/27, the number 27. I'm going to pull it up on the screen. You can also scan the QR code here. This will actually give you 27 different ways to fund your business. Most people don't even know this type of funding exists, and this guide will give you 27 different ways to fund your business. So make sure you check that out at creditsuite.com/27. And customer savvy says, thank you, dear. I'm getting discouraged. I've been following you for 3 years. I still don't approve. So remember, are you taking the steps? Look, here's the thing. Knowledge is worthless without action. And what I mean by that is that you have to start building your business credit. So my first advice to you, customer savvy, is you want, and I apologize for the connection issues. I do not know what is happening with Restream today, but it keeps kicking me off. I've never had that happen before. The best thing to do if you are struggling and not getting results is scan this QR code or go to creditsuite.com/EIN and start building your business credit. If you followed these steps today in this guide, you would get approvals this week, guaranteed. You will not follow the steps in this guide of building business credit and fail to get approved. You will get approved. And the more business credit you start to get approved for and use, the more other lending becomes available to you. So if you are struggling to build money or to get money to grow, scan this QR code or go to creditsuite.com/EIN. It is a 100% free guide that maps out the steps to build business credit, and that it will help give you everything that you need to succeed. And here Elise says, Iran is messing with your connection. That may be very true. So thank you very much for coming in. I really appreciate an opportunity to answer your questions, talk to you. And don't forget, go to creditsuite.com/EIN to grab that free step-by-step business credit building guide. creditsuite.com/27, the number 2, the number 7, to be able to get 27 different ways to fund your business. Thanks for tuning in. Sorry about the connection issues today. Hopefully it will not happen again. I'll see you next time where we talk about more cool ways to get the money.